This is London with Bitcoin Spike and VIP Trader. We will be talking about the New York close. We will be going over, particularly Bitcoin. Also, we'll be going over, Tesla, NVDA, former hedge fund owner, private non-SEC, not financial advice, Duke University, Harvard Business School, all that good stuff. Shout out to our VIP. That's it. How you guys doing? Great trade week. Glad that we caught some of these big moves. Now, in terms of the details, we can go over Tesla. We'll do some trend analytics right now. Tesla, a little bit of a difficulty. We talked about a kind of a warning yesterday. We went through this in the back in terms of just the nature of this, let's say this rising specific channel formation on some a variety of time frames, particularly the 45-minute, the 30-minute was showing an upward sloping channel here. We went into a warning zone here. You guys will recall that. Just a little bit of extra caution anytime we have a move to the downside and a slope, guys, an upward sloping dynamic in the form of a channel. Always be aware of that. I hate to just call that and scream bear flag, but to the extent that that is conformant on one time frame alone, yes, that was the reason for the heads up trying. Now, this is going to be the question as you look at NVIDIA and you look at Tesla, trying along this bottom line pickup for a second dip, an uncomfortable position. We'll talk about the NASDAQ a little bit in terms of where we are at. Particularly important is the monthly when we're pushing along this capital control line. Were we to flip bearish entirely and close out this month to the downside, it really would be giving up a lot of potential. You'll agree to the upside in terms of that top side target, which everybody got on board with. It seems like in the market, everyone on Tesla was really going to the upside as we were to look at a potential for a 20-30% move to the upside. So capitulating the 20 moving average, tough. I have to say, in terms of the capital control line in play, and we're just giving up a lot. Again, some unforeseen, I'd say, commentary in that recent conference call. Don't let it scare you away from the market, guys. It is what it is. Just let it be what it is. In terms of the good, the bad, and the ugly, take it all. Preceding on Tesla, preceding pivot picked up here quite well. We're down and under that preceding pivot. So we've got some ground to make up now, technically speaking, if we were to look at the dynamics in play. And we don't necessarily have, this is the one thing, we don't necessarily have that accompanying pivot here. It is implied with that cross trend line from the specific resistance to support. So it's a valid trend line. It's a valid break. Pay attention with one caveat. It's a valid break. As we look at the specific daily chart, it's a valid break below with confirmation. I'm going to leave that descending triangle there just for us, okay? It's a valid break below on this topping formation, okay, with the caveat of the following. We picked up at this specific, I'm going to talk about it if it's a complication, this specific hit here was a specific pivot resistance to a pivot support. You got it. What is our complication now? Well, we happen to be right at another pivot. So we happen to be at a preceding, a drop-off spot for the bulls, where the bears were able to engage. And now it's like, well, the bulls are saying, well, we dropped it off there last time. Let's go ahead and pick it up. So that's going to be the complication as we look into the feature here. I would just say there's a bit of momentum to the downside, to say the least, in terms of the NASDAQ. We want to take a look at the NASDAQ as well. I hope you're all doing well. Guys, the star of the show is whom? Is you, first of all, with the trading. Congratulations. I tell you all the time, this is not intended for live trading. It's just not. We focus on the technicals across markets in terms of crypto and in equities particularly, so that we can bring that framework and our strategy down into our crypto trades. Worked very well recently with Bitcoin. Congrats to everybody who traded that trade up and over that 200 weekly moving average. That was the deal. If you missed it, I am not sorry, because you were invited to participate along the entirety of the time. So if you missed it, yeah, you didn't want to hear me say something for 2 months and actually do it, huh? That is on you. That is not on me. For 2 months straight, I talked about the over the 200 weekly moving average. 2 months. I gave you 2 months, guys. Rewind. 2 months. So we're excited we caught it. We hope you guys caught it too. In terms, I know a lot of you did. In terms of the specifics on Tesla, looking at the details, let's go through, what do we have left here? About 6 minutes. Let's point out the following in terms of your capital control lines, in terms of the specific features that you're going to say, okay, it's time for a pickup. This is just some dicey, and we'll rewind one moment here. In terms of this morning's trade session, if you will watch that, it's 3 to 5 minutes long. The whole stream was 3 to 5 minutes long. If I could make every stream 3 to 5 minutes long and we could get some trades quickly, just bam, out of the starting gate, that is what we want to do here. Now, that does not mean you need to do that, okay? That requires a different set of skill and proficiency. I'm just going to tell you, based upon, guys, based upon everything that I know to be absolutely concrete fact and true in the market, it takes a lot to get to the point where you're comfortable hammering into the first 5 and 10 seconds and quick taking it in and out in the market. Don't push yourself to do it, but rewatch it so you know what's possible. See the types of moves and volatility that we're attracted to. Please review this morning's, I'll just ask you kindly to review this morning's stream. Watch it again. It's awesome, guys. That's what we're in the market for, is volatility wherever we can find it. So taking a look at where we're at now, we've seen a bit of an engagement along the specific, if we're going to call these as just standard Fibonacci levels. It's just I'd like to see an open tomorrow with some additional nice trade opportunities. That's just what we call them, ops. Opportunities. You guys got it right. So let's let Tesla open in the morning and get through this this quagmire in terms of, let me say this, if you own a short from up above, congratulations. That's all it needs to be said. Congratulations. If you own a short, let's say for the cross under the 20 moving average on the daily, congrats if you own it. Let's say for the cross under of the 4 hourly 20 moving average, boom, which happened before that major drop on the conference call. If you own a short from up above, congratulations. Congratulations. That's a weight of trade. Our cap line did quite well. Capital control line did extremely well on that move. So we'll trade tomorrow. Tesla. Sound good? We'll at least assess the technicals. Now, in terms of, let's go through, let's see, this should be, let's see if this is all Bitcoin? It may be all Bitcoin. Where is NVIDIA? Let's see, NVIDIA is off the map right now. We've been trading NVIDIA on the sidelines, haven't we? We'll go through NVIDIA, but you guys have a good handle on the back in terms of what we've been covering. Let's just take a look real quickly and see if I can bring up NVIDIA. NVIDIA, I must have clicked here off of NVIDIA. Let's redo that, and I'll bring that back up. Let me click save to make sure that I am on par with that. We have a couple minutes left before New York closes out. NVIDIA, tough routine. Now, you saw on, at least we have this confluence. We talked about correlation precedingly. We talked about fundamental and technical analysis quite in depth a few days ago. It was a nice talk we had. Hope that rounded out some understanding or some approach that you may have with the overall markets and your trade game. Looking at the specifics here on NVIDIA, we are down and out on the daily. Without a doubt, this is a breakdown of a major topping formation. Is this an entry for a short? Technically speaking, as we close out, is this an entry for a short? Bam, hit the button. It's a short. Carry in the risk for tomorrow. Is it? Technically, yes. What's the risk? Well, it's the risk all the time on a closed market that you get passed up, wiped out, et cetera, et cetera. Welcome to equities. Welcome really to crypto. Why we love crypto. 24/7, 365 never closes. We're never surprised. We never get a stop loss that is charged through on our orders. No, in equities, you do. You put your stop loss right here. Bam, no problem. You put your stop loss right here. What happens? Well, we blew through it. We crammed it up to the upside. So I'm going to say this in terms of the feature here. This is why when you hear me say, you want to own shorts higher. You got it right. You want to have some leeway in here as you look at the differentials, guys. It's technically, yes, it is technically a short opportunity. Is there a caveat like there was on Tesla? Sure there is. Boom. Right? We can take it on over off the lines and straight onto that candle wick, and we're just fine. We're holding support. We're perfectly in line with a perfect pickup. Right? In terms of that maximum, guys, the move to the downside that we wanted, we just got it. Congratulations. A bit of a tenuous position you are placed in with just a touch. Let's go on the weekly. We agree? Yes, on the weekly would be the 20 moving average close. Down and below, and just about 95% the way to the target. So congrats to anybody who traded such. And you're going to find a little bit of risk in the form of a lack of confirmation. What do you say, guys? 8 out of 10 times. If you find it, if you find your perfect trade 2 out of 10 times, you may find one 3 out of 10 times. Yeah. So be prepared for a mixed narrative in terms of, let's say, a mixed set of technicals that you can enjoy. All right, those specific trades when we don't have the mixed technicals, when all systems are go. We're like on Bitcoin. We'll trade this tomorrow. Be a nice level for the bears to try and engage here, wouldn't it? On the lines to see those shorts parked out because NASDAQ just went through this. Let's talk about the NASDAQ real quickly. And New York is closed. New York is closed. They have closed down the markets. Now, in terms of the surprise feature here, we want to call it a surprise on the NASDAQ. Not necessarily. We are just capitulating from something that looked really nice. And did we have to do that, huh? Did we have to really go there? Now, what's the specific focus here? Big time, preceding pivot, right? A preceding pivot's going to be something we're definitely going to pay attention to. In addition, we want to pay attention to any of the specific hit marks wherein we can expect or we should anticipate the probability of a uptick on the NASDAQ. And we're going to compare that over to our equities of choice. We're going to look at and expect and build that into our Tesla and our, let's say, our assessment on Tesla, our assessment on NVIDIA. And we're going to note such in the context that today we have a correlated approach to the market. We have a correlated engagement between the NASDAQ, between NVIDIA, between Tesla, between Bitcoin cooling off a little bit. So as we look at the overall dynamics, we're going to be assessing, at least assessing, guys, the specific, we can just start with these, bare bones Fibonacci retracements, but I want to know when and why. Why am I saying this? Because if you'll recall this 23.6 that we hit here, what was the 23.6 here on the NASDAQ? Pay attention, please. The 23.6, okay, was the specific, if we were to look at this topping formation, and now we had a recovery, a busted pattern for the bears, but we remember this point right here. Why? Because we caught that point right there. We did. We caught that specific move in the back, boom. And what did it translate into? It translated into the bottom of NVIDIA. Perfect, did it not? It was the grab without a doubt. Yes, so was it as well implied with, was it as well implied, or let's say was it as well implied or conveyed on NVIDIA's chart? No way. NVIDIA had a little bit more room to go. Granted, our fire and ice green buy line on the weekly caught it perfectly. It did. Okay, let the indicator and the calculations speak for themselves. But in addition to where we are at now, we will discuss and we can talk about the fact that we have a busted pattern which has created a differential in terms of the, and it's interesting to note, a differential in terms of the patterning in play. All right. Do we go off of the original? And I'll just tell you, last time on the NASDAQ, it was sweet and just perfect, straightforward enough. We didn't have to worry about it. It went right down to our 23.6 target. I mean, it wasn't a big deal. It's like there was an expectation that we were going to have a hit. Okay. As we were to look at this here, okay, if we were to look at this specific, let's say this level here with an engagement 23.6, where are we at now? The question is going to be the following. You guys can look in the back in terms of just this quick draw on the fly technicals here, but look in the back if need be for what exactly the level of engagement was on the NASDAQ. You can pull that up probably by just a search in Slack on our server in Slack, guys, and business server, by the way. So looking at the details here, what we're going to say is this 50% is on the radar for the original pattern. Okay, but what happened? Well, we busted. We did. So this is the complication in play now as you look at, and do note that we got the perfect hit at the 23.6 the first time. So out of the box, out of the gate, it was perfect. So when we're dealing with the complication, we'll say, okay, well, that is a complication. But to the extent that we have had a perfect trial run up front, we couldn't ask for anything better. 50% engagement, you got it. In terms of that, in terms of the specifics there, let's look real quickly. And you guys know, we're about to get to Bitcoin. We'll go through the details very quickly. Most of our Bitcoin stuff we do in the back. We just do. We'll kind of hang this laundry out to dry in terms of equities all day long. But most of the Bitcoin, big Bitcoin trades, we're doing in the back most of the time, guys. Looking at the specifics here, in terms of the feature we are currently parked at, and just pay attention to, if we are to incorporate this changed pattern on the NASDAQ, And if we are to look at the new topping formation instead of this original busted descending triangle, where are we parked at? The 23.6. Okay, so the 23.6 that we hit up here, you'll have to look back at the chart, was actually on the candle wick. Bam, pop to the upside. So this is a level of interest, without a doubt, based upon the specific topping formation which resulted, you see we had the descending triangle, but then we busted to the downside, busted, bears busted, thrown out on there, thrown out of the party, guys. Wasn't their party. Bam, back to the upside. Looking at this return function here, what we can say is that we have a discernible level of interest right now at the 23.6, a discernible level of interest at the 38.2, a discernible level of interest at the 50%, and on back down into and through, we have a discernible level of interest now. You got it, guys, back to a preceding breakout level, okay, far below. So to the extent that we are at a level of interest, absolutely. Having traded that 23.6, okay, as laid over into NVIDIA, etc., I'm just going to say that you're definitely paying attention to this. Everyone who's trading, who traded, and was incorporating any type of technical from the NASDAQ or any other equity on over into anything they were trading, they're paying attention to this. This is front and center on the NASDAQ, looking at the 23.6, and everybody's like, man, this just paid big time. It did, it paid big time. Now, what's on the shelf? Just on the cliff edge, Tesla and NVIDIA, right? So it's a nice moment, huh? You're gonna give it to the bears, or you're gonna just make them sweat the whole time, because that's all they've been doing. You know this. That's all they've been doing at each and every level and opportunity. The bears who have traded this. One thing, if you have entered your shorts high, you're okay. You're all right. But if you're hitting the gun, guys, to the downside late on breakouts, it can be miserable. So this is a nice technical moment. We agree. What's the solution again? Well, we're just going to say owning your shorts higher. It's a bottom line, without a doubt. Bottom line. What do we got here in terms of? Hey, we got Scotland in the house. What's going on, Scotland? In the house, trading, huh? Nice to see you trading. In terms of the details. In terms of the details, and thanks for showing up. In terms of the details here, this is a great technical discussion on the NASDAQ. And really, as we slide back into a level, and I'm just going to tell you guys, personally, I really am going to stick by the guns that we're going to be a lot happier if we can get the entirety of the markets to rebound somehow and play some game, play some ball with crypto. We can cut against the grain. We can do it. I don't know how long we can do it for. We've done it. We've just done it. But to expect an absolute blowout season, we're going to go win the Super Bowl. And every other team, every other sport, everything else is going to just shut down. But we're going to be on the field. We're going to be the solo champs. And with crypto, we're just going to win the Super Bowl. No competition. It's just, understand, we like confluence. We like having a bit of, just feels like cooperation from the overall macro, from the sentiment to the fundamentals, okay, to the technicals, etc. We just are more comfortable like that. When the whole screen's green, you got it. When we're not relying on maybe a situation where Gensler might do something or could have already but could be undoing it. And we like clean, clear sailing on smooth water, right? We just do. The alternative can be done. It can just get a little bit more aggressive psychologically. You guys know that. So my preference is that everything realigns, all the stars align, and we really put forth something nicely. With that said, NASDAQ, you just see NASDAQ, really hurting after that cross under reconfirmation on the 20 moving average on the weekly. That weekly is a big time frame for everything right now to be considered. Okay, so looking at, let's just look at Bitcoin. Look at Bitcoin's weekly, up and over and boom, very nicely done. I have on balance volume right now. If you see green on the screen or red on the screen, it's on balance volume, and you guys should have that soon on your Fusion, to the extent that you want Fusion. Fusion takes a while to get used to incorporate. We still haven't done any kind of training series on it. I know it's I know there's a lot to it, okay? When you're looking at it, I know there's a lot to it. It may seem overwhelming, but that machine learning concept is there for a reason. It is stout, okay? So I'm looking forward to seeing you guys develop some proficiency and expertise in machine learning the concepts and the application thereof throughout the rest of Q4 and 2024, without a doubt. Okay, looking at the fourth, let's say the Bitcoin 4-hourly chart, the most impressive thing is going to be, of course, let me take my power band off here, is going to be what? Now, it didn't engage along, I'll say the 4-hourly didn't engage, okay? The 6-hourly engaged perfectly, all right? You saw this, but the 6-hourly engaged perfectly with a hit upon our RSI stochastic MACD kernel calculation, period. The 8-hourly engaged perfectly, boom, right up along RSI stochastic and MACD. 4-hourly did not engage. However, what happened on the 4-hourly? On the 4-hourly, we saw the capital control line turn red, which is what? It is not a guaranteed, it is not a given, it is not a shoe-in that it's going to occur, and anytime the capital control line can flip, true? Yes. However, it is a heads up, and I just tell you, if you rewatch the stream on the Z-Pack, big time, in terms of the volatility expression, in terms of the Z-scores, volatility expression, what we're looking at with the capital control line, what is it? It's going to be determinative ultimately as to whether or not you're going to contact your mid-level moving average. If you will rewatch that, and if you will see the structure of the Z-Pack, okay, Z-score, volatility, all right, if you will look at that, you will see that the red is a conditioned precedent, okay, to engagement many times, the majority of the times, to engagement on the 20 moving average. That's going to be the midline of the Z-Pack. Now, if you don't know what I'm talking about right now, there's time to figure it out, but your volatility around a 20 moving average or any moving average is going to be expressed by bullish and bearish control. When we see bearish control, we have been above the specific moving average, bears control back to the specific moving average. In this case, the 20 moving average. So you see the red, plug in and forecast the contact with your trade, which is your 20 moving average on the 4-hourly, which is currently trying to hold. Absolutely. Now, understand moving average can come up or the capital control line can come down. Okay, so you can still wind your way up. You can blast through the capital control line. We know this, but it's a very highly proficient calculation and play. It's something we rely on frequently. In addition, we will go down to the lower time frames, try and get entries instead of, let's say, entries long instead of shorts. Let's say shorts above, we'll try and get entries below. But looking at some of these hits on the 4-hourly, you just see that's a beautiful hit. That frustrated, then a beautiful hit, right? 20, boom. You got it, huh? 20, boom. Moving average, okay? So your capital control line and your 20 moving average have been the ticket to the show on the way up here. Period. You guys know this. Period. 4-hourly, killed it. Entry, long, up and over, bam, launch. Entry short, entry long, boom, up and over, short. Entry, it was close, a couple bucks. You guys measured out on the 20 moving average, you know this. It was a little off, but close, right? Boom, up, out, and over to the upside. So the 20 has been instrumental, right? The 20 has been instrumental. Our 200 weekly moving average was the key to go to, right? That was the key to go to. Glad that we caught it at that, in this range, that 200 weekly moving average. So the fact is the following: we are retesting a primary level of consideration in terms of entries, which has paid so nicely, which is a condition precedent towards our having a target, further target to the upside. This is something you're familiar with. This is, guys, VIP. This is what we're about. It's not all Bollinger Band. We have a lot of different tactics, from the machine learning on in through Capline, on in through regression. We have the support vector machine, guys, pivot, radial basis frequencies. We can get on into the last page of the calculus book or the regressive book, guys, here, and we can go on down the road, but this is front and center, the simplest thing to abide by in the market and to gauge your interaction with. So along with Fire and Ice, go get them. We'll stream in the morning. Nice trade day. Remember, you just made money in the market. What's the last thing you want to do? Give the market makers or the other traders back the money that you made in the market. That's not going to work, guys. That's not what we do. Make the money in the market. Stay disciplined. make more money in the market. Okay? Do not get careless. There are no careless traders in the group. No, we batten down the hatches, guys. Get serious about having a great fourth quarter. Do not get sloppy. Do not get lazy. You tighten up those stop losses. Okay? Tighten up those stop losses. Do not go down the road of easy come, easy go. Do not go down that road, easy come, easy go. Tighten up your stop losses, become more proficient and precise, focus more on the market. You had a good start to the fourth quarter. Let's get involved in the next 2 months to finish out this quarter and make it an absolute closed book in terms of the year. That was it, and it was the last 2 months of the year that did it. We had a great start to the fourth quarter, but it wouldn't have been that type of year if we did not really focus into the last 2 months. Let's make that our story, guys. It's in process of being built. You can do it. We are doing it. This is London with Bitcoin Spike and VIP Trader. We'll talk to you all soon. Take care. Bye-bye.